Welcome back to Fintech Spy, the show where we stare at a chart so long it starts staring back, and then we both agree to pretend that's price discovery. Today, we're talking SOFI. And yes, this is not financial advice. This is market-themed comedy with a mild technical analysis accent. Also, if you hear me whisper earnings week, that's not a catalyst. That's a stress test. So here's the setup. SOFI is walking into earnings on Friday, January 30th, pre-market, which means the market is about to turn into a group project where nobody read the syllabus, everyone pretends they did, and the loudest person confidently explains the wrong worksheet. And just to keep things spicy, we've also got chatter about a US government shutdown potentially landing right on the same day, because nothing says healthy macro environment like optional civilization scheduled next to your quarterly report. Meanwhile, analysts are quiet, like suspiciously quiet, like the quiet before two bears pop out of a trash can on earnings week, followed by two bulls doing backflips on the conference call while management says the word guidance like it's a magic spell. And that's why today's episode is the perfect fintech spy cocktail. No big company news, a tiny insider headline, and a chart that looks like it wants to do something, but keeps hitting snooze. Which is great, because it means the entire narrative is basically earnings will decide our personalities. All right, analyst desk first. Still quiet, no fresh updates, which is honestly on brand. Earnings week is when analysts emerge like seasonal Pokemon. One or two bears show up first, acting like they discovered gravity, and then a couple bulls follow right behind like, actually, if you squint and ignore risk entirely, this is beautiful. Now for the news, and I'm considering this news the way traders consider risk management, mostly theoretical. We did get a Form 4 where an EVP sold just under 9.5 thousand shares on January 20th at $25.74. Important context. They still own about 303,000 shares, and the sale was part of a trading plan adopted July 30th, 2025. So this isn't some dramatic, the ship is sinking moment. It's more like the market saw a receipt and immediately started building an entire conspiracy documentary. Because the interpretations are always the same. If you're bearish, you read it as, in Cedar sold. It's over. We are going to zero. If you're bullish, you're like, it's a planned sale and they still have 303,000 shares. Relax. And if you're me, you're staring at it like, this is the market equivalent of someone taking one French fry off your plate and you filing a police report. Translation. Not a panic headline, but it does fit the theme. Pre-earnings, everyone's tense, and even normal activity feels like a plot twist. Also, no real company news, which is kind of perfect because it means the market is forced to do what it does best. Project its childhood trauma onto a candlestick chart. Zooming out to the weekly. SOFI is still consolidating, but it's also stepped down the past couple of weeks. Translation. The chart isn't collapsing. It's just slowly relocating to a slightly cheaper neighborhood with less natural light. Now let's talk MACD, aka the indicator that tells you momentum is changing, usually right after you've already emotionally committed to the wrong direction. On the weekly, MACD is drifting down toward neutral, which is the chart's polite way of saying the earlier upside momentum is cooling off. Not crashing, not flipping the table, just backing away from the buffet and pretending it wasn't that hungry anyway. There's no big bullish crossover yet, nothing that screams, new uptrend unlocked. It's more of a momentum is fading situation, and in trader language, that means, if so, FI wants to rip, it's going to need a reason, not just vibes. Meanwhile, the weekly stock RSI is still deep oversold, like comically oversold. Like the chart is lying on the couch saying, I just need a minute, and stock RSI is in the single digits going, same. And underneath all of that, you've got the weekly 50 EMA around $22.17, still rising and still acting like the only adult in the room who brought snacks and a plan. So the neutral but bullish idea stays the same. If so, FI shows up with strong 2026 and 2027 guidance, the weekly chart is positioned for the kind of reversal where the move doesn't need to be a miracle. It just needs traders to stop catastrophizing for 5 minutes. Now the daily chart, still consolidating ever since the stock offering, and you can feel it. This price action has that we had an event, and now we're emotionally processing it energy. Key detail. So, FI is broken just below the 100 EMA after using it as support, and the 50 EMA and 100 EMA are getting closer together. The convergence is like two coworkers standing too close in the elevator. It's not inherently bullish or bearish, it's just uncomfortable, and it usually ends with a move. Now let's talk MACD on the daily, because this is where traders start saying words like reversal and then immediately getting punished for it. Daily MACD is still sitting on the negative side of life, but it's also showing signs of trying to stabilize. It's not a clean bullish crossover yet, nothing you frame on the wall. But it is the kind of setup where you can feel momentum thinking about changing and then refusing to commit until earnings forces it to. So the read here is simple. As long as daily MACD is still under pressure, the market is basically saying, cool story, but prove it. A bullish turn here would matter because it would signal that the post-offering chop is finally losing control of the narrative. Meanwhile, daily stock RSI is still oversold but curling back toward neutral, which is basically the chart saying, I'm not okay, but I'm at least sitting upright again. And the EMAs are doing something quietly important. The daily 50 EMA and 100 EMA are compressing, with price hanging below the faster averages. That's the technical way of saying this thing is coiling. Not mooning, not dying, coiling. Like a spring, or like a trader's nervous system on Thursday night before earnings. So yes, the chart is still the trailer. Earnings is the full movie. All right, 4-hour time, the time frame where the chart starts speaking fluent trader anxiety. First, the 4-hour chart is still doing that annoying thing where it wants to move. But instead, it keeps printing smaller and smaller candles all week. That's classic compression. And compression is historically when traders get uncomfortable. Because it's either about to break out, or it's about to fake out. Or it's about to do the third option where nothing happens, and you just lose confidence and hydration. Now, the immediate issue. The 50 EMA is still acting like resistance. Every time price tries to stand up straight, the 50 EMA is there like a strict gym coach going, nope, one more set of consolidation. Now let's talk MACD on the 4-hour, because this is the short-term mood ring. Right now, MACD has basically reset back to neutral, which is the indicator's way of saying, I'm not bullish, I'm not bearish, I'm just emotionally unavailable. There's no meaningful bullish crossover screaming at us yet, and no aggressive downside momentum either. It's more of a we are waiting for a catalyst situation. And spoiler alert, that catalyst is usually the thing we already mentioned, earnings. Meanwhile, 4-hour stock RSI is sitting near the bottom of neutral and leaning toward oversold, which is basically the chart saying, if you want to bounce, I'm not going to stop you. I'm just not going to promise anything. And overhead, you've got a clean little stack of EMAs, the 50, the 100, and the 200. Sitting above price like 3 bouncers outside the club. If so, FI wants to reclaim short-term momentum. It's going to have to earn entry back through that zone. Which brings us back to the official Fintech Spy diagnosis. The chart looks like it's loading, and we're all just staring at the spinning wheel pretending that's a strategy. Now for options, the place where traders turn feelings into contracts. And yes, we're doing this properly now. Expiration is January 30th, which is perfect because that lines up with the vibe of this whole episode. Everything is basically orbiting earnings like it's the sun, and we're all just houseplants begging for guidance. The options market is pricing an expected move of about plus or minus 2.82, which is Wall Street's way of saying, we are not guessing direction, we are simply acknowledging that chaos has been scheduled. And the open interest targets are clean enough that even a sleep-deprived trader can follow them. On the downside, the biggest put positioning is stacked at the 25 strike with about 30.9 thousand contracts, with the 26 strike right behind it at about 28.4 thousand. Translation: if price starts slipping, those are the levels where the crowd is already standing, and those strikes can start acting like magnets. Sometimes that's support battles, sometimes it's pin behavior, and sometimes it's the moment you realize your plan was just vibes wearing a blazer. On the upside, the calls show you where the dreamers are camping out. The largest call open interest is sitting at the 30 strike with about 20.6 thousand. And the next big level is the 29 strike with about 15.2 thousand. So if SOFI comes out with guidance that makes the market stop doom scrolling for 5 minutes, that 29 to 30 zone is where you'd expect the loudest cheering. And also the quickest emotional whiplash. Because traders love turning happiness into should have sold in under one candle. So the neutral but bullish red stays simple. The downside crowd is anchored at 25 to 26. The upside crowd is stacked at 29 to 30. And the implied move says earnings week could realistically test one of those neighborhoods. Just remember, options positioning isn't a prophecy. It's a map of where people will scream the loudest when the candle decides what kind of personality we're all getting next. All right, your turn. Going into earnings with maybe government shutdown energy lurking in the background. Are you expecting SOFI to pin 25 to 26? Or do you think guidance is the kind of catalyst that drags this thing back toward 29 to 30? Also, what's your favorite earnings week coping mechanism? Charts? Memes? Pretending you're long-term for exactly 48 hours? Drop it in the comments. If you enjoy overanalysis, undercertainty, and premium sarcasm, hit like, subscribe, and share this with a friend who thinks MACD is a protein powder. That's it for SOFI this week. Quiet analysts, one tiny form 4 headline, a chart in compression, and an options chain that's basically screaming, "See you at January 30th." We're just here for entertainment, emotional support, and the occasional chart roast. See you next episode.